Hello and good afternoon, everyone. We're just getting ready here to get started, and go ahead, throw something in the chat. Let us know where you are listening in from. We got a great program for you today with Nick Chahine tuning in with us, and let us know what you're looking for in the market. It's been crazy seeing what the market's doing today. Lots of headlines. How can we make sense of all this, and how can we win with options this week, even in the face of all this volatility? So I will get started here in just a few moments. All right. Good afternoon, everyone, and glad to have all of you joining us here today. Again, my name is Jonathan Mallard, and I work with the onboarding team here at Benzinga Pro. Nick is just wrapping up his trading day, and I see he's joining us right now. So we've got a great session in store for all of you today. I'm so glad that Nick is able to join us and just make a little bit of sense out of this crazy market. Whether you have a lot of experience or not a lot of experience, we're going to go over some key principles that you can follow today, maybe talk about some specific opportunities that you can take advantage of and what to stay away from this week, as you definitely want to protect that hard-earned capital that you work so hard to put to work for you. So Nick, welcome. Good to see you, man. How are you doing today?
Frazzled, doing well. I was no, so I share my screen with the chat members, right? So
Right.
I'm like trying to close out the day with them. We did some good work today, but I usually linger for like an hour after that, and we hang out and do some homework off hours when things calm down. But we set this up, and I was like, I got to get to Jonathan. I got to get to Jonathan. So, I like what you said. Job one, protect what you got, and then deal about look up. What can I do? Like I just literally had the conversation with somebody who is trying to add to a position in NVIDIA. So they're not thinking wrong, but anyway, we can talk about that. So what's on your radar?
Well,
what did I miss?
You didn't miss much. I was just kind of prepping everyone here, and it looks like we have someone tuning in from Mexico City. Let's see, where's the Zoom chat at? So yeah, we got Mexico City, Washington, Toronto, Canada, Calgary, Canada, and Louisville, Kentucky here in the Zoom chat. And I think we have a few people on YouTube as well. And Nick, I was watching your market overview, the strategic video that you published last night, and just looking at some of those key levels on the S&P 500. Obviously, we're breaching the some of those levels today to the downside potentially. And then also I watched your video on Marvel Technologies, and then it looked like you also had a note on Tesla. So I thought those are all very different situations, right? That we give our viewers a good idea of how you analyze these companies in terms of what to look out for.
Yeah, and I did another one today. I haven't pushed the video out. Somebody in the chat room asked about a ticker. Gosh, I'm getting old here. It'll come to me in a second, I promise. So anyway, they asked, what about the stock? And I said what I liked and what I don't like about it. And I'm constantly bringing new tools into my toolbox. And I just picked up a new tool this weekend, and this is my first day trading it. So I was like trying to incorporate that tool in there. So I came up with like, okay, I do have an answer for you, and let me show you a video. Maybe I can. So I put my thoughts into a video, including a trade setup, but not a full-blown trade alert, but it could be. So from A to Z, I picked up a ticker that they asked me about, and I just ran with it. And the outcome. So that's what we do all day, is people bring ideas. Like yesterday, we did the Sunday meeting that I do a webinar every Sunday. You know about that. And it is the 108 tickers or so this time on the low side came ideas from the members. So they said, these are the tickers I want to look at. And there were a couple of specific questions. What do I do about this debit call spread and this credit put spread? So Snow, Snow was the ticker. So, clearly a tough ticker, but I came up with a strategy if somebody's interested in it. So the homework is there, a lot of homework, but number one job is to protect everything you have. So you want me to share my screen?
Yeah, absolutely. I'll stop sharing mine and you can take over.
Okay, now I lost the whole window. Where are you at, Zoom? Whoa, get out of my screen. Okay. Your face is right in my face. It's like, no. Screen share. Can I share a whole screen? Is there anything embarrassing here? No, I guess I can share a whole screen. Which one? This one? Screen 3. I just bought a new computer this week, and so now the screens are all messed up. So what do you see? You see a
Yep, we're looking at
S&P.
S&P right now.
Okay. All right. So what you said is true. We are breaching. So let's look at the macroeconomic conditions first of all. The first things first. What does the world look like, regardless of how good Snow looks or how good Amazon looks or whatever ticker you're looking at? You have to look at the whole market. So I do that once a week, and I send it on Sunday evening. Last night it was late because I was running around doing some things. So I start there. So is the world, meaning the stock market, conducive for a rally, or is there undue risk? Clearly, we're in a war situation. Headlines are flying left and right. So we have that scenario. We also have the fear of the Fed rate hikes, which seems pretty stupid now in the face of world war, right? But today we played tag team in fear, and I'll explain that in a second. So levels, the 124 level here, the flash crash came from Bullard statement on 124. He crashed the market, his words. We bounced hard. And then we flash crashed harder and bounced even harder on the war talks. So now today they tested and broke through, which is unfortunate, 3% down through the 124, and we're falling a little bit lower after hours. So clearly they want to test this floor here. The problem with that is if losing this without having that weird candle means we're going to 3,900, 3,800. Losing this means we're going to 3,700, 3,600. So technically, these two, this area has become almost a target on a technical basis. What we do tomorrow will determine whether it's going to get there or not. So the bounces will be met by sellers. You can see it, lower highs. They will bounce. What happens with the bounce? That's where the bears have control. They can sell the pops and come back and test the floor, and the floor will fail, make a lower low, bounce. They will sell the pop. So what do we do? These are my windows that I share, by the way. All day, every day, these windows are, you can watch this all day live if you're part of the chat room. So here's my, before we get started, these are my ABCs. A, what do you do on bounces? A, I add insurance if I want to. B, I book profits if I have them faster than normal. C, I close problem tickers. So my note in the morning was, I expect a rally on the S&P, even when the SPY was down hard last night. It came. I said, what I do with that rally is the ABCs. If I bought put calls, if I went long at the dip, and a lot of people did, they should have closed. And earlier today, I had a couple of setups on the S&P. This is 15-second chart. You won't see it. 5 minutes. Okay. We bought the dip where this is here. So a couple of times and they worked, but if you didn't book them real fast, they disappeared. So if somebody got 20%, 30% win and they decided to stay long because they saw good things coming, they suffered all of this. So the ABCs work. What kind of environment are you in? Back to my page. So you have to respect the overall price action. Bears are in control short term. They're selling rallies. That's important to know. That's the difference between a pro and an amateur trader. So, so the idea is to know the overall picture, and then delve into Snow. So the question came about Snow. I forgot how they worded it. So I was like, okay, let's delve into Snow. Fundamentals are still too new. The growth is there. So I looked up the fundamentals of the company. It's young. The growth is undeniable. It went from this little to that much sales, and they still lose money, but that doesn't matter. Super expensive, 50 times sales. Whew. But it doesn't bleed cash, so that's good. So that was the okay. So there's no selling point. There's no detriment from the fundamentals. Technically, it should see a violent rally back this year. From what point? So I said, if somebody's looking to get long the stock, they can start a position into this support. Therefore, now you have an action plan. If I lose the support, I was wrong, I'll get out, I'll try later. Or if I lose 30% of my money, I'm out. Otherwise, you should be able to profit from a big rally. And then I shared how I would take the longs with room to spare. So that happened today. So this is what we're reduced to doing. In an environment like this, Jonathan, you have to stay tactical. So the difference is, I'll share, just before I hung up, I was talking to Srinivas, and he was asking about NVIDIA. He said, what do I think of it? I said, what's your time frame? Turns out that he's investing in it. And he said, it's $100 off its highs. First of all, give me the percentage of the highs. And second of all, the high was crazy. So it being $100 off the high is not a selling point to me. How far is it from support? That's the selling part. So it has immediate support, but it looks like the market. I guarantee you, if this is lost, NVIDIA could be under 160 within a couple of weeks. So then he provided the information that he bought it at 310. I'm glad he shared that information. So it's not easy to share losing trades. Luckily, he only had a starting position, which is good. So if you take positions in tranches, like one bite at a time, you're saving yourself, because you give yourself room to add more to come to a full-size position at a reasonable start. People who take a full-size position all at once are too cocky. In this environment, who can trust that? I mean, I'm solid on the fact that NVIDIA is a good company. I have no idea what it's going to do tomorrow because of the problems overseas. So we could wake up to, God forbid, Russia expanding its excursion outside the Ukraine, and then all hell breaks loose. We're down 20% in a day. So we cannot be that confident. So if you plan on owning 100 shares and you only bought 50, kudos. Do I add the second 50 here? Not me. I don't know anything today more than I did 2 weeks ago. So if it falls to 160, maybe I'll add a second batch. What does it mean? It means I averaged in, not down. If I bought my full allotment, I have to live with it. I should not make my problem bigger. That's my personal preference. Also, look at it. Giant head and shoulders. You see it?
Right.
It's giant head and shoulders. Gosh. So let me see. I'm sharing my screen so I can show you this. By the way, this is kind of the setup I shared in my video about Snowflake, kind of. So I can either buy upside. What is going on? In the chat room, somebody's going crazy. Either I buy a call spread, or I sell a put spread, or I can do both. That means I'm long for pretty cheap. All I need is for Snowflake not to fall through this level. So it's 195 now, 198. I need it to not fall through 155. And then this money will pay for part of this call spread. So that's the kind of stuff I like to do. So anyway, I was going to share with you the concern on NVIDIA. I'm not telling you to short NVIDIA. I'm telling you to recognize the risk we're in. Overall risk. Look at this neckline right here. You got shoulder, giant head, and another shoulder. Arguably, it's like complex kind of shoulder. Anyway, so if the bulls fail here, they're going to fall as much as this. Eyeball. This line should be as big as this line. So 160 to 138 is fair game. And if you look left, that looked like a baseline for something. See that? So 180, this is where I get interested in it, if it loses that. So what if I'm not long any of that? If I'm not long this company, I can get long saying, hey, look, 2 huge bounces, big base for this whole rally, big bounce. This day was incredible. 224 was unbelievable. We're falling into it. Buy it. Somebody could say that. They would be correct, but they're traders, and I guarantee you that they will stop out immediately if they lose that or this. So this is last ditch effort right there. Or this. See how you get sucked in? No, you got to pick a line and say, I'm out here, I'll try later. So if somebody did that today, I don't mind it. But if somebody's adding to their long, like I know this person was adding to their long, I'm not that excited about it. So you have to be more tactical than investing type of a deal. Facebook, I would invest in. Zoom, I would invest in because they've fallen through and into their pandemic levels. So now we're down into the meat. So there's no fat on it. Like Zoom video, we had a discussion in the chat room today. Somebody disagreed with me and I kicked him out. No, I'm just kidding. I didn't kick him out. We debated it. I told him why I disagreed. I said it was a good deal. It was a bargain. He said, no, the growth is in trouble, or forgot the adjective they used. And I was like, where do you see toast? Like growth is toast. You mean the acceleration of growth is not as hot as it was when during the pandemic hit? Sure, yes. But the fact that they turned the green comp over a pandemic comp was mind-blowing, in my opinion. I ran companies before, and to do that is incredible. So I give them the benefit of the doubt. Plus, it's only 8 times sales and like a 25 PE, cheaper than Apple. What? That's a bargain. So I think this company, this stock, could be 275 to 310 sometime this year. So I'd be willing to buy personally 50 shares and sit on them, or sell some puts to own shares, and maybe buy some in the money calls or call spreads instead, or sell a put spread to buy a call spread, like that picture I just showed you with snow, out in time. Let them fight it out here. Eventually, they'll come to agreement.
And before, so what were you talking about in terms of $100 off the high versus a percentage off the high? I mean, this is way different from off of 600.
So what's the biggest thing that happened in our life, you and me, in the last 20 years? The pandemic. They shut down the world, right? They literally shut down the world. So that's a good reference point for everything. So in this case, I look at, this is 2019 down here, and then it fell, and then it woke up going into the pandemic. And interesting how Teladoc and Zoom, it's like people knew a pandemic was coming, right? Teladoc even more blatant than this one. Whoever invested in Teladoc early, the SEC needs to, actually the governments need to look into them, because Teladoc took off way before the pandemic. Not way, just weeks anyway. So here, Zoom, that's the pandemic. It took off for good reason, because everybody needed its services, and they suffered some growing pains, but nowhere near like, say, Peloton. And they dealt with it, and then they took that incredible growth and they grew more. It's just mind-blowing what they did with that. That was a great job. This was crazy. This was crazy. This is lunacy. So now it's back to like the pandemic never happened. I bet you and I right now are on Zoom, right? And that's a habit I picked up. I'm not leaving. And my mother's birthday is today. So guess what we're doing? She lives in Lebanon. I'm not going to Lebanon. So the habits are sticking forever with everybody. People are flying more or less. They're doing more Zoom meetings. Family get-togethers over Zoom now is a thing. So Zoom is a viable thesis from a concept. And the financials are impeccable. I mean, to look at, first of all, they create $1.6 billion in cash out of their own operation. So Tesla, that's what made the change in Tesla. Tesla was bleeding cash until like 2018, whenever he was smoking pot on TV or whatever. And they almost went out of business because they had $900 million bond they needed to pay. And something clicked that year. I don't know what he did. He just turned the company around to start making $6 billion. Like here, this one is 1.6 for such a young company. So if they want to do anything, they don't need to borrow. They can feed their own growth, which is freedom from bankers. Because when you make a decision as a CEO or group, you don't have to have a banker, hey, yeah, you can't do that. You already owe us too much money. No, they're freedom. So revenue, look, 60, 150, 330, 600, 2.5 billion, 4 billion. Wow. This non-pandemic year over a pandemic year, that's pretty incredible. So maybe the rate of increase went from 88% to 325 back to 50. I'll give them a pass. Oh, they only grew 50%. Losers. Yeah, I'm being sarcastic. And they have 1.4 billion in net income. So I'd say statistically, with a 24 PE with such a growth company and 8 times sales, it's a bargain. This number was 125 at the height. I remember complaining about it, telling everybody, hey, you can't buy it up here. It's 125 times sales. Oh, you don't know anything. And then it normalized. So bargain. I could buy 50 shares out of 100 right now. And if it gets cut in half, I'll add the next 50. And if it doesn't, I'm already long 50. Why go all in? Everybody's, nuclear. They're all in, all out. And they double down. Don't double down. Average down. Don't double down. Doubling down just makes your problem bigger. That's as simple as that. So what is the focus of today? I forgot to read the title. What were we supposed to talk about? Help me out.
Well, what we're talking about the title is 3 option plays you need for this week. And
okay.
I knew we had a lot of material to work with.
We just covered 3.
Exactly.
We're done. I'll see you later.
You've got Zoom, you've got Snowflake, you've got, I don't even remember what the third one was.
Whatever.
But so what I'd like to do possibly is to dig in a little bit more in terms of the option plays, because there's multiple ways that you can go about that, right?
Yeah.
Just like you were saying, well, if I want to invest, I could just buy 50 shares versus utilizing options to leverage capital responsibly.
Yeah. So I'll tell you my favorite things to do, and we'll go from there. I can't find a chat room, so you're going to have to tell me what's going on in it. Okay. So the chat comments, I mean. Okay. So let's take Zoom. So I'm going to assume that the audience here knows a little bit about options. Can I make that safe assumption? So, and if not, let me know if they stop me and say, I don't know what you're talking about. I'll dumb it down as much as possible in order to kind of get it a level playing field. So a stock has fallen so much into support zone. I don't have a hard line in the sand because it's been a while. So the support is not like as reliable as, say, overnight support, where it's clear this close. Okay, the machines will rely on it. It's pretty far back, but it is a zone of support. It was the base for a giant rally. They may overshoot lower. Maybe I'm not finding an exact bottom. Thereabouts lies a buyer. Okay. So I like the stock. I want to own shares. My favorite thing to do is to sell puts into fear. The stock was only down 1% when the stock market was down 3%. I believe it was up earlier today. So maybe its relative performance shows the lack of froth that's left in it. So it lost its frou-frou weight. Now it's down to the meat and potatoes, so to speak. So remind me to come back to pen later. Zoom, ZM. This is an options chain for Zoom. So quick lesson on options if you don't know anything about them. An option is a contract between a buyer and a seller. There are a couple of kinds. There's some called call contracts and some are put contracts. So like every contract, they have terms and conditions. In this case, we'll cover the basics of the terms. Number 1 term is time. How long do you want this contract to be? I'm going to go with May. And if I pick May, that term is 74 days. So everything on this page has a lifetime of 74 days. So time is very important. The shorter the time, the cheaper things get. So time is important. Tick tock, tick tock. As soon as you buy something, you're on the hook and time is starting to tick against you. It's like you buying health insurance, life insurance, whatever. It's on the clock. You better die before it runs out. No, I'm just kidding. So time is one. The second thing is price. So I can pick my contract to be at current price, which is about 108, 105 or 110, or I can go lower to 70, or I can go higher to 145. So we haven't talked calls and puts yet. All of this on this side are puts. All of this are calls. Puts are not bearish. Calls are not bullish. Both can be both. Depends what you do with it. So get that out of your head. I don't need to own stock to buy or sell any of this stuff. So also there's the fact that each contract on this page represents 100 shares. So now we covered terms, time, 74 days, level, we'll pick the level in a second, and count, 100 shares. Each contract is 100 shares. Okay, what does that mean? So I'll tell you, if I want to buy, let's go back to Zoom. If I wanted to buy Zoom shares now, and I said to myself, you know what, Jonathan, I wish I could buy it at 80. Okay, I wish I could buy it at 80. All right, so you go to the options contract. Hey, there's an $80 thing. I sell this. If I sell the one contract, I just said, I wish I can buy it at 80. Is this better? So what happens when I do this? I collect money. Somebody pays me $420 today. I'm going to round $400 today for me to promise that I would buy their shares at 80 in the next 74 days. So I said, I wish I can buy them at 80. Somebody said, hey, I'd sell you mine at 80. Okay, here's $420, the guy tells me, for me to promise that on paper. Done. So me, who wants to buy it now, I opted to not buy it now, but collect money to buy it later, lower. That's what I did.
And that point right there is so counterintuitive to so many beginners, because when you start out, all that you think about, at least the way I started out, was you only think about it in terms of buying the contract, buying a call or buying a put. Yeah. So just want to reiterate that we're talking about selling a put.
Yeah.
So you actually get paid up front versus paying money for it.
Right. So this is where it says it. Sell right there. So right here, I'm selling, not buying. The buyer, the other side of my trade, there's always another side, is buying insurance. They're happy. They're bullish. If they were bearish, they would get rid of their shares. But they want their shares, but they want them with insurance. I'm saying, I want your shares. I'll give you that insurance. So my worst case scenario is I get my wish to buy the shares at 80 and I get paid for it. No money leaves my account. None. Money goes into my account for me to be bullish Zoom. The only problem is that's the most I can make. $400 for one. So, but that's a problem I can deal with, because what I can do is I can deploy it to something else that's bullish. So in this case, why do I choose to do that? I know it's falling. I know it has value. The VIX is 38 or 35 or whatever it is. Everything is so expensive, and I'm selling an expensive thing into a valuable thing. So that's like the best case scenario. So the worst case scenario of my trade is me getting a bargain entry point. And guess what? I break even at 76. So here, let's walk through the worst case scenario. The worst case scenario of this is, let's scratch it up. So let's say right now Zoom is 108. Let's say tomorrow CPI comes out on Thursday. Oh my God, it's 8%. The stock market goes down. Zoom does this. Okay, so this $420 turns into $2,000 or whatever. I'm making up a number. I don't know. It explodes in value. So my position, the position will show losses. It will show you're down 1,000%. What? So people panic and they go out and close it. So how do you close this position? You go out and buy it back. Well, you only collected 400 and you panic and buy it back for 2,000. That is a gigantic loss. I wouldn't buy it back. I would let them give me the shares, because what happens then? The worst case scenario is I wake up one day owning 100 shares like I said I would. And what happens to all these losses that were on paper? Gone. They disappear like they never happened. I didn't buy it back. It was paper losses. I never, quote, realized them. So they go away. And I keep my $4. So that means I break even right here. So if I didn't panic and the stock is at wherever, 70, 72, I only lost this much. So why panic? And on the chart, I'd be long and even here, right there. That is February 2020 level. That's a problem I can deal with. And it may happen. So I must be ready to own shares. Do not ever sell a put if you don't want to own shares. And by the way, this is not a trade recommendation. We have so many other things we need to contemplate. So this is just me showing you how I would go long a stock when I need room. Like, I don't know when it's going to rally. I know it's falling into support. I want to own it, not here lower. Somebody else wants insurance. They're buying the insurance from me. I'm being the, have you heard the term market maker? That's me being a micro market maker. That's a tiny market maker. When you sell a put, you just made a market. You sold something. So somebody bought something. You actually came out and said, hey, I'm selling sardines. Come get them. So that's what this is. You're being a market maker. Now, there's a variation to this trade for somebody that does not want to necessarily commit to that kind of risk without any protection. And they turned it into a credit put spread. Same theoretical odds of success, much less risk at hand. So the first one is me selling this. They call it naked, one leg naked, sell one put. Again, I don't own shares. That's how I would get into shares. But hey, you know what? World War II or III is here. What if it happens? Okay, so buy protection. So I sell something, I'm on the hook. I buy something, I'm off the hook. Somebody else is doing me a solid here. So instead of collecting $400, I'll collect $100. And you're saying, oh, that's whacked out. You're risking $4 to make $1. Yeah, but that's a 25% yield with about 85% theoretical odds of success. And I don't need a rally. So let's reword it. So the statistics on this one, I'm collecting $1. That's my maximum reward. My maximum risk is if the stock goes to zero, I lose $4 per contract. So, and if it doesn't happen, if Zoom stays above 80, I win. I deliver 25% on my risk. So the alternative ways of doing this is for me to spend $400 buying a stock and having a 25% rally happen in 74 days with 85% certainty. That's the equivalent. Well, this delivers that. I don't need a rally. In fact, it can fall to 80 and a little bit lower, and I can still profit. So that deal is a bullish position that needs no rally and leaves room to fall and delivers 25% yield on my risk. That is my favorite ways of getting, quote, long a stock under fire. So the caveat is I don't chase stocks. Like somebody came to me this morning. Can we talk about, what did they say? BBBY. Up 80%. It was like, what? I said, what is it up on? Did it get bought out? No. The CEO of GME bought shares. So I said, buy a put. That's what I said in the morning. If they bought a put, they made a ton of money because it was up here. So they made all this in profits if they bought a put. And I said, this is like the craziest thing on the planet. The craziest thing on the planet. Timing is everything. And the fact that the stock, the CEO of a struggling company bought stock in a struggling company makes that other struggling company almost double overnight. So timing is important. So let me rephrase it in another ticker, Upstart. I like it. I went long for the group down here, the chat room people, the options people, they got long here, and they got instant 25% rally, 17% overnight, 25% over 3 days. So I'm not against the company. But if I use what I just used with Zoom logic here on this dip, $100 off of the, if that person came to me, hey, it's $100 off the highs right here. Can I do that credit put spread again? And if I had said yes, they'd be in trouble. I would have never said yes because it's still way too high. Look at all of this. No, I did that down here. I did it here, but not up there. So timing is everything. Ford, same deal. I said, go long Ford around 7. I shared it with the group. And then somebody said, what about now? I said, no. And then it did this. Nick, I told you, I was like, I did the right thing by avoiding it here. And I'm telling you, avoid it here again. And then it did this. How about now? No. Boom. How about now? I said, I think you'll get long under 14, under 15, maybe even under 14. So no, not a time. So timing is very important. But let's say here, somebody to do what I'm doing with Zoom with Ford, I'm okay if they know their levels and time frame. So timing is appropriate. So up here on this drop, a credit put spread, not my thing, because I know how fast it came, and this is not enough of a drop. So you can't trade every stock all the time. Sometimes you'll say, you know what, I missed it. For example, Chevron, Exxon, FCX, CF, X, every commodity, Mosaic, every commodity stock. If you went long this week, you're not part of the Nick group. So Nick, you're a loser. You're missing on all these beautiful rallies. No, I'm doing what works, which is avoid runaway rallies if you're not in already. I'll give you an example. All right, so this story has happened before. This is Mosaic. It just went into a place where it collapsed from 2013. Keep that number in mind. This is oil in 2013. Okay, so right here, Goldman Sachs came out with a paper saying oil is going to 150, and that was the top. We didn't have World War III brewing back then. I don't know what it was. I forget. I remember I was trading oil. I made a lot of money at trading oil. And then 70% drop. So you have to pick your entry point. And if something gets away with you parabolically, you can't be doing what I do. Nobody should be doing that. Only tactical. So if you want to trade CF because it's exciting, or oil on a 15-minute basis, I'm not against it. But if you're investing in Mosaic now because it's looking good because commodities are so hot, that is whacked out logic to me. I don't get it. It's beyond my comprehension level. So pick the style that's appropriate to what you're trying to do. If you're tactical in and out, this is probably not the best way of doing it. But if you're trying to trade great stocks that are under fire, like today, Tesla was falling out of control. Let's go there. I'm trying to get you used to the type of thinking that goes, how I use options safely. So here's Tesla, a very violent stock. Tesla. Somebody with a good size account. Smaller accounts cannot do this, but somebody with a good size account. Today, Tesla is down 4%. The VIX is up 14% at 36, the VIX. So everything is explosive, expensive. So I can go out to April, and the numbers are going to be below your mind. And sell a $500 put, $510 put, and collect $500. So somebody today would have paid me $500 to buy their shares at 510. Tesla is at $800 right now. So that's how much fear there is. And this is only for 38 days. 38 days. Let's say I like Tesla and I really want to own it. If I go to May, I can collect $1,000 to buy them at 480. 480. If I really like Tesla and want to hold it, be long Tesla through October, where is it? I can collect $1,200 to buy it at 350. 350 Tesla. Hold on, let me get you 350 here. Somebody would pay me $1,200 to buy their share here if I commit to do that this year. That's how much fear there is baked into this market. So it's not that it's impossible for it to go here. I mean, if the stock market corrects 15, 20%, Tesla will breach this and will target 500-ish, 490. I can see that happening. But if I wanted 100 shares of Tesla, why not get paid $1,200 now? So here's how I use this. If Tesla gets collapsed like this, and I see visibility on support and there's no this or that, like earnings or anything, I would sell a put, and the next day they would calm down. It would rally a little bit. That put becomes a lot cheaper. I'll just buy it back, scalp $600 out of it. Not everybody can do that, but you can do that with a credit put spread instead. So that's the kind of trading I like. As far as specifics this week, I already talked about a lot. It all depends on what you like. So how about we open it up to them? Give me a ticker, and we will see if we can put this to use. Do the same logic on your ticker.
Steven's asking about AMD.
AMD, okay, that's viable.
And what I really want to highlight too, just that whenever you get back to the contracts, is I talk with people all the time concerned about how much money they have to have in their account. And so just showing the difference between the risk or the amount of capital you have to have for selling a naked put
Okay.
versus doing a credit put spread, because
Okay.
you don't have to have as much cash.
No, but so that's a valid reason. That's why I said not every account can do that when I talked about Tesla, because it's a beefy, it's a beefy ticker. So let me show you something. So there's the word margin in options is not the same as stocks. Some people come over from the equity trading and they say, oh, margin this and margin that. In margin in options is all cash secured. So there's no borrowing involved. So when they say this trade requires 10,000 in margin, it means the platform gives it $10,000 worth of risk. So if I have a $50,000 account and I open this trade, they lock 10,000. And they say, you don't have 50 anymore, you have 40, because those 10 are going against the risk here for as long as that trade is open. So when I sell a put or sell a put spread, they'll reserve as much as they deem the risk is. And that's the quote margin requirement. There's no borrowing. I don't need to pay them anything for that. It's just cash secured. If I have 50,000, they'll take a chunk. Put that aside, can't touch that. Now you only have 40. So let me give you the work around that. Okay, so with Tesla, I use that as an example. I used April 500, was it? Okay, 500. Perfect. So what was the first ticker I did? It's a better example.
You did snow earlier?
Snow. Okay. Snow. And I went with April. What numbers were they? Anyway, let's go with snow and or zoom. Snow. So if I sell the 160 April put, if I sold this one, I collect $600 or $700 for it. The platform may reserve 20,000 for it, and it's a sliding scale. They take into consideration the current high VIX and how much money I have in the account and how volatile the stock is. The implied volatility here we haven't talked about, but how volatile the stock is, and they'll the formula will come up with margin requirement equals so much. And if I have 40,000, they'll reserve that much. Now you're saying, well, I don't have that big account, that kind of big account. Well, first, they require less money. You would be using less money out of your account than buying the shares. So if you were going to buy the shares, because that's why you sell a put, to buy shares. If I wanted to spend $193 times 100 shares, I guarantee you the number required from this one is less than that amount. So that's not an argument against selling a put. You tie up so much margin. Well, if you buy the shares, you tie up all the shares margins. You just paid that much money out of your account and you're losing right away if it falls. You actually lose right away. In this case, you tie up a portion. So, but there's a workaround. There is a workaround. I also told you that you could do a credit put spread. So the credit put spread takes that out completely. So in this case, I'm only risking $380. I cannot lose more than $380. So if I open this position, I can do this position with a $500 account. I shouldn't, but I can. So this position, if I took one contract, I collect $120 and I'm risking $380. That's it. The stock can go to zero or a million. Those are the statistics. They do not change. So the platform does not have to do calculation or anything. It knows the maximum risk is the money I collected minus the money I can lose. The money I can lose is $5. I'm long here, I'm out here. I'm on the hook, I'm off the hook. The stock goes to zero, I'm on the hook, I'm off the hook. I collected the $1.20. I lost $5 total, but I collected the $1.20, 5 minus 120. That's the net loss. That's it. So that's how you can work around it. Do a credit put spread. This is also called a bull put spread. And the odds of success are pretty phenomenal. They're the same. So if I sell this put, my odds of success are about 85%. I'm eyeballing it here. Selling a put spread, same, because the risk is right here. Same risk. So that is the advantage of doing credit. That does a workaround. Like if I don't have $100,000 account, I couldn't sell a naked put in Tesla, but I could do 10 credit put spreads, because that would only require 5,000 maximum. That's 30. In this example, if I did 10, I would collect $1,200 and risk $3,800. So to give you an idea, so somebody with a $50,000 account can definitely do a 10 and have a chunk of a potential reward without even needing a rally. So it is a viable trade method. It's not foolproof. Otherwise, everybody would be doing it, because you cannot believe how people cannot resist chasing. So your person said AMD. So if you came to me on AMD going up here, I would have said, you missed it, catch it on the flip side. So up here, I would have said, set an alert somewhere around 125, because you want to buy the dip into support. When the stock breaks out, that's the breakout. It tends to revisit footing to see, okay, this was solid footing. But in this case, they kept breaking out after breaking out after breaking out. So here's a breakout, here's another one, but they never came back to retest this one. So now they finally did, and they're doing it again. So if you're going long AMD here, you're not crazy, because it's falling into support. Amazon did the same thing. They have an unusual situation. Look, the freak out from 224 was better than the freak out from 124. Double-edged sword. So today it had an accelerator saying, uh-oh, you just lost the level, you're going to here. That's what this thing said. But this one said, no, you had a huge freak out here. You have strong support here. And look, this was the exact base from last time. So if somebody went long AMD today, I don't fault you. If you went in all in with a full-size position, I do fault you. You shouldn't do that these days, not for the next 3-4 months. Because until this war thing settles down, whatever you think about AMD, you don't know anything about the entire world, how that's going to play out. Let me show you the scenario with AMD. I told people with AMD, I think you will have an opportunity to buy it under 60, under 70. And they looked at me like I'm crazy and hater. I'm not. I love AMD. My best story is from AMD. You'll hear it. Look at this giant head and shoulders. If they lose this, they have support here, here, and here, and here. But technically, the machines will start hunting this. And I'll tell you why this makes total sense. This is where the story, I've been telling the story for a few months. So, hey, Nick, you've been calling for a debacle in AMD. No. I said, I would prefer to enter with conviction when it comes down to a level that I have tangible lines on. And I'll show you where that was. Okay, this rally right here is my whole problem. Last year in the summer, 2020, summer of 2020, this rally. So they built a beautiful mansion on top of holes. So there's no volume here. See these things? This is called volume profile. And there's nothing here. Look, volume, hole, where they're at right now. And then volume, hole. So God help them. If they get in here, they're going to go. So there's a lot of support below here. But this technical breakdown will break through that support based on the technicality. So I think it needs to cover these. Not every gap needs to cover, and this is not a magnet yet. But it's not logical to have this whole thing built on holes. It just doesn't make sense. So be careful being too long too soon and adding too soon. Don't add. Check it out. This is a weekly chart of the same company. Those are the holes I was talking about. You don't see them in the weekly charts. But the headline, the head and shoulders, you do. Totally. Do I have it there? I wonder. Yeah, I do. This blue line right there. So a lot of supports everywhere. But you have to respect it. Look, stop out. Whatever your conviction is, I have it to my people. Stop out. I don't want to know how low they want to go. I'll just pick up the pieces once it comes down there. So I love AMD, but so here's the deal. I can try to catch it as a tactical trade. So whoever asks is thinking tactical. If you're thinking of adding to an existing position, I would hold off. if you're thinking of starting a new position, I can, and I would do a credit put spread or sell a put and tight stop, which means that I say, if I lose X%, I'm out, I'll try later. Don't dig your heels unless you really want to own it there. I wouldn't buy calls. The VIX is 35, way too expensive. Let me explain that concept. Let's say AMD. Let's say I bought calls today. The VIX is 35, 36. I bought calls. And then tomorrow, the markets rally and I don't see profits. Like, I bought calls. Why aren't I making more money? That's because the VIX just got cut 20% or 15%. That reduces the call premiums on everything, calls and puts. The craziest scenario of this is during the GME breakout and the AMC breakout. I bought puts and the stock rallied, doubled. The day I bought puts, it was up like 30, 40, 50%. I forget how much. And I made money on my puts. It was crazy. Both sides, the call side and the put sides, were green. I had never seen that before because the implied volatility, the VIX of that stock exploded to 1,000. So everything got so expensive that even the losers made money. Everybody made money except the people who actually shorted the stock outright. I shorted the stock by buying a put and I made money, whereas somebody shorted the stock outright traditionally. Oof, bankruptcies. Oh, man, don't ever do that. Ever. Don't ever sell a call in a ticker you don't own. No naked call selling. Covered calls, yes. Naked calls, never, never, ever, ever. Okay, so I got sidetracked a little bit. So yes, AMD. Back to AMD. If I wanted to catch the falling knife, my least favorite way of doing it is to buy a call today because the VIX is so high. It is doable, but it's pretty expensive. My favorite is to sell into fear, sell a put into fear. So if it's a conviction position, I can sell like an 85 put and collect $300 almost to promise somebody that will buy their shares. But I wouldn't do all of it. Like if I wanted to buy 500 shares, I would only do 2 puts maximum. Sell them. So collect $600. If I go to May, I can collect more or go down lower. So if I go down lower, so I can make the same bet at $75. And I'll give you a story in a second that'll make you giggle. So what about doing both? Earlier, I showed you a pen. Okay, I told you, let me remember, go back to pen. The picture would be, if I sell a put spread and buy a call spread, sold a put spread, bought a call spread. That's, by the way, my practice account with E-Trade. I'm not recommending it. Full of bugs, but it's a good learning platform. So if I sell a put spread and buy a call spread, I'm really long that stock. So I can withstand it falling a little bit, and if it rallies, I'm long. So that's what I would do with AMD. I would sell a put spread, not all in, and or buy a call spread, which is a moderate way of taking a long on a stock that you're not iffy. So why do I buy a call spread when I said I don't like buying calls when the VIX is high? Because when I'm buying a spread, I'm spreading my risk. So buying a call is expensive. The VIX is high, right? How can I neutralize that? I sell a call. Now I have a spread. I can make it $10, $15 wide, whatever I want. So now I'm buying expensive and selling expensive. The expensive part doesn't matter. The VIX can be 1,000. I don't care. I'm buying one, I'm selling one. The net effect is going to be the same. The VIX is 30 or 20, doesn't matter. So in this case, I'm paying $380 to turn it into 1,000. And I need AMD to rally through 115. Or I can pay $200 to make it into $500. And all I need is for it to rally through 110. Or I can buy it in the money, spend $330, that will turn into $500 if AMD doesn't fall below 95. It doesn't need to rally. This, when I buy an in the money call spread, it's like a credit put spread. Time is my friend. You want time to tick, and when the time ticks and price is not fallen, this turns into 5. The only reason it's not 5 right now, it should be. The reason it's not five because there are 38 days left on the clock. Careful doing this with a stock that pays dividend. I don't think AMD pays dividends. No dividends. Okay. So don't do this with a stock that pays dividend. There's a nuance there, because if you sell a call spread, down here and it's X dividend day, you will wake up to a nasty surprise. Somebody will put you the short leg that you sold, even though the position is winning, and you will owe somebody some dividends, because shorting a stock means you sell something you don't own. Well, the owner of that stock needs their dividends. Guess who's going to pay it? You. So it's not cool. Don't be short like the SPY call when the SPY quarterly pays dividends. All those dividend payers. Like I wanted to short Chevron. I opted not to because I knew that the rally would go close to my credit call spread, bear call spread, and would cause me to close the position prematurely because of the dividends. So I didn't do it.
That's
all right. So point. That's AMD. I would sell a put to own the shares. I would buy a call spread to own the shares. I would sell a put spread to own the shares. I could do both. So let me put them here visually. So this is not a trade recommendation. I'm just telling you what I would do and what I wouldn't do. So, okay. And then we just talked about these two. Okay. So selling this is bullish. It's called selling a put naked to own shares. Selling this is called selling a put spread to, it's also bullish. Neither of these two need a rally to win. All I need is AMD not to fall through 80. If it falls through 80 and I only sold this, I'm on the hook from 80 on down. If I did this, I'm on the hook here, I'm off the hook here. It can go to 65 and then my maximum risk is finite. Whoops, these two are different, wrong. Buying a call naked is costly, $700, almost $800, and the VIX is high, so I'm overpaying. I wouldn't do that. Buying a call spread is the moderate way of doing, and this one we've just determined it costs about $200. It can turn into $500. So in this case, if I do all four of these two are bullish that need a rally to win. This is bullish that does not need a rally to win. This one gets me credits into my account. This one costs me money out of my account. In this case, doing all four of these is $1.50 expense. So if I did these alone, it would be more. It's like $2 and something. So this must be like 50, 60 cents. We'll check in a second. So this is a viable trade. I wouldn't do it in one order, although I could. So if I do one of these, again, this is not a trade alert. I'm paying $150. And what can I make? If AMD rallies through this, I can turn this 150 into 500. So what's the advantage of doing these? Well, the cost was over 200 if I hadn't done this. So this is 60 cents, I'm going to guess. So let me check. Yep, 60 cents. All this by itself is 60 cents. This is $2.10. So the two is a $150 expense out of pocket. So that's the kind of stuff I would do it. Again, this wasn't a specific trade recommendation, although it does fit. So I'll share with you the story about AMD during the pandemic when the markets fell out of bed for good reason, you know, but we shut down the world. Let me see if I can find it. Is this it? No. Where's the pandemic? This one. Okay. Wow. All right. So during the pandemic, I'm trying to focus it. We had the first drop, you know, whoa, crazy lockdowns. It's going to last 2 weeks, 1 week, 3 weeks, 1 month, whatever. And AMD fell hard. So on this first drop, I sold puts for October down here. And let's put a visual to it because it explains the concept. So on this first stint, I sold puts in October at 22. So I said to somebody here, I'll buy your AMD stock at 22 for the whole year. You tell me any point in time here, you want me to buy them at 22, I'm your guy. And price does not have to be there. They can exercise their right anytime they want. They're in control. I'm not. I cannot force them. It's like me being Allstate, and if I sell you car insurance and you have a fender bender and you do not want to file a claim, you do not have to file a claim. I cannot force you to file a claim. So the buyer that paid me $2.20. I kid you not. So if I did 10, I collected $2,200, and all I had to do is wait to be assigned shares at 22. So my break-even point was here. And then the market did this, and that $22.2 they paid me turned into like $1.60. So I could have bought it back for $1.60 and made 60 cents out of nothing, out of thin air. Mind you, nothing. I collected money to open the trade, and then this happened, and then the market took a tumble, and we collapsed into a complete shutdown of the world. And I did the same thing over. Only this time, I sold the second batch for July at 20. Because we fell harder and the VIX was 80. So the premiums are more expensive. So I was able to sell it for July, so shorter, 3 months, lower $2, and still got over $2 for it. So if I had done 10 more, that's $4,500, $4,600 I collected. And all I needed to do is wait to be assigned AMD through July, half of them, and through October, the other half. Clearly, that didn't happen. AMD did this and went to the moon. So people panicked. I said, I got you back. People breathed. People panicked more. I got you back. And then people forgot about it. So they paid for insurance. We were both bullish. I liked AMD, and I was willing to bail them out. They liked AMD. They wanted to hold on to the stock, and they were willing to pay everything. I mean, who does that? I mean, at $20, really, AMD? You should get out of the market if you think it's going to 20 and it's going to be a disaster. So anyway, I mean, I see them paying $2 to protect it up here, but down here is wasted money. So knowing the quality of the company. So that's the situation we look for. Some freak out where you see visibility and you're like, I got you. But you can't do that with AMC, for example, or even GME or BBBY. You can't do that. You can do that with Apple. You can do that with quality stocks where you see support, like Facebook right now, Zoom right now. I would do that. Like if they fall apart now, I'll be there. I'll be the insurance salesperson. So these are ideal situations. They're not super exciting, but they're relatively safe. And there's nothing safe, but they're safer than buying something and hoping for a rally. Buying calls when the VIX is this high is like the worst thing you can do, but it gets you the most profits quickly. But it also would lose you the most quickly. Who fell hard today? Who fell hard? Let's see BBBY. BBBY is like the craziest thing today. Look, so the people that bought calls yesterday or Friday made 300, 400 times their money today. Clearly, they guessed it right. The people that bought puts got shellacked, but not by a lot. That's weird. Oh, wait, that's way out in time. Let's go to this week. $2,200 their money this week versus they lost more than half their money here. So if they guessed right on the upside, they made a bundle. But if they guessed wrong, they lost more than half their money overnight. So you win fast, you lose fast. It's exciting to be long calls, but you better be good with charts. We are good with charts. We can help you with that. But if you're just buying and hoping willy-nilly, if you don't have a system, forget about it. You're going to be eaten up. You're going to be outmatched over the long term in options. You need to be good with fundamentals, super good with charts. And luckily, I've developed pretty good sense of charts with plain, simple English, and I can help you understand it. And I keep adding my tools. So every day we're looking at, I promise you today, we went down to a 1 second chart with the S&P during the open market, and 5 second chart, 15 second chart on the daily, 30 second chart to trade fast, which means that we know what we're doing with charts. And that applies to daily charts, weekly charts, and everything. So if somebody came to me, I'm looking to sell puts in such and such company, I can tell them if if they're making a grave mistake potentially or not. So develop a system. Jonathan, I didn't pull up my the cards that have the basics of what not to do, but I can promise you that the first thing is always first of all, know your risk, know your maximum loss. If you don't know that, it means you're shorting markets outright, you're crazy, in my opinion. You're not stupid, but you're crazy. So you got to know your maximum loss. And the second one is to be realistic with your expectations. Don't go on hope. Have a method. So I'm going long because A, B, and C, not because I thought it was going to go up or I thought it was going to go down. Why did you think it was going to go up? If you don't have a why, if you can't explain it to me, then you shouldn't take it for yourself. So have a method, and then have an exit. So like today, I shared the idea of snow. I said, if you do go long snow, have an exit plan. What's the exit plan? If it loses support, that was the whole reason. It's falling into support. If it loses support, I was wrong, I'm out. The other one, if I lose 30% or 50% or 20%, set a number you're comfortable with, I'm out. Okay, if I make 20%, I'm out. That's me. I got 20% fast. Thank you. What if it rallies 150% more? So be it. See you. So today we caught a couple of 20% rallies. If somebody hung on for the 50% rally extension, they got a loss. I rather miss out than lose anytime. So these are the basics. Know your risk, have a plan, specific reason why I got in, so you can have a specific reason to tell yourself when to get out. Either good, you made 20%, 15%, or bad, my reason is gone, the level, or my reason is not gone, but it's too much pain for me, I'm out. That type of scenario. That's really the basics. So we did AMD. Is there another one? Maybe we can put it to good use there.
Yeah, absolutely. You could choose out of Oxy, Disney, and Tel.
Okay, so you know me. So I reviewed 110 stocks last night, Saturday night and Sunday morning, and did a video on it Sunday morning. So I know most of these stocks by heart. So Oxy, pet peeve company of mine. If you're looking to go long Oxy up here, you and I have different ways of investing. If you're looking to short it, okay, but with a very safe debit put spread. So Oxy, I'm going to tell you my opinion to do you a favor. So this is a stock, in case you don't know, before the pandemic, it went into a bidding war, I believe, with Chevron over Anadarko Petroleum. They outbid Chevron. Chevron said, whoa, that's too much money for us. Chevron, okay, so that's like the fattest oil company out there. They said, whoa, Nelly, that's not for us. What's her CEO name? Maybe they said, whoa, Becky, whatever her name is. Anyway, so that's not for us. So they outbid them. And then the pandemic hit. By the end of the pandemic, the combined market cap of Oxy and Anadarko was less than what they paid for Anadarko to buy it. It was billions and billions. And guess who lent them the money? Buffett. So here's the deal. So are you on Team Icon or Team Buffett? Icon ditched them. He bought it, they collapsed, he added, and he bailed. He's been fighting for her. No, you can't buy Anadarko. That's too expensive. And she went and bought it. So he's exited. He made $1 billion on it or so, Icon. Buffett's still holding, but his entry cost is way lower because he actually had warrants from lending them money, like convertible notes or something. So do your homework. That's my understanding. For me, a stock that looks like this, I would, if you force me to trade it, I would short it by buying a put or a put spread. Let me show you that company stock performance. So this is quarterly chart, super long term. We're talking 2002, the rally into 2011, the great debacle of gold and commodity crash from 2011. It went down to pennies, basically under $10, stayed there for a year from the pandemic. In this period of time, the combined capital market cap of both companies was more than what they actually borrowed to pay for that company. The buyout of Anadarko was bad timing. You know, she may have had good reasons for it, but when you outbid Chevron and Chevron says way too much money for me, I mean, that's take guts. She might be brilliant. I don't know. After the fact, I may be proven wrong. But a stock that rallies into a big cliff like this was a clear place where they lost footing, right? That's a fact, not my opinion. Forget my opinion about her, the CEO. This was a debacle level. When you come back into a debacle level, you're going to face resistance. So there are sellers lurking there. So let's go to a monthly chart, not a quarterly chart. It's easier to see. Look, that candle right there, so close to this candle, I wouldn't have the guts to get long because everybody's stuck here. Thank you, Jesus, I'm out. So this one, you can see how pivotal this line has been for a long time. Chances are it's going to find some buyers and sellers interested. So it will slow down the one-sided action. Let's go to a weekly chart. So on the weekly chart, you lose that sharpness, but you get a more recent sharpness. So 2019, this was a clear head and shoulder period, or at least a place where they tried to hold several times here, and then whoop, and never came back. And that's their first touch back. Now, if you're a fan of this company, here's what you want happen. So you and I can do the same thing and both profit. So if I wanted to short this company, I would be betting against it because this was a prior accident scene. So there should be sellers here. So I would say there is resistance here, and that's a fact. It's not me saying it, that's a fact. There's going to be sellers in this cluster right here. So what you want happen, if you're a bull, is for them to come down, maintain the ascent, so that the behavior is not a line of buying the dips. And if so, then they can come back and attack it and have a battle at it again. Now they can overcome it, test it for footing, and take off. How far? This much. That will be a proper breakup. So me, the person who bought the put, I would be exiting the puts somewhere in here. The bulls can gather the steam to burst through it. But to do these ridiculous, moronic moves, it's a sham. It's a sham. It's a new thing that they call it, the apes of Reddit. It's more like Neanderthal, Wall Street now. Wall Street does it. The people on Wall Street do it. So it's pretty crazy.
So that was a great answer to Mark's question on the Zoom chat. He said, in this environment, shouldn't most of our option plays be on the put side? I think he means on the bearish side. What we just saw was a good way to play it on the downside and then switch it up for the reversal, right?
Yes. I'm agnostic. I mean, I take issue to people telling me I'm wrong for avoiding a rally. Like I have people in my group that make fun of me every day. Hey, Nick, oil is a 124. It's like they enjoy sticking it to me or something, because I've said I wouldn't chase oil up here. It's a made up supply demand issue. It's totally made up. The US can pump as much oil as it wants to and satisfy the whole entire world if they wanted to, but they choose not to. So to tell me that, we have an oil problem, we do not have an oil problem. We have an oil policy problem, and that's it. So I'm not arguing for it or against it. But if push comes to shove and everybody cuts us off from oil, what are we going to do? Succumb or pump? We're going to pump. So we don't have an oil problem. We have an oil policy problem. So I've said, I'm not chasing these oil companies. I'm the one that said buy Chevron and Exxon when they were in the middle of the pandemic. I said, if you want fixed income, Exxon paid 10% when I said to get long. I said the company is lean, mean. They're excellent operators, both of them. Bargains. And you had two CEOs that came out and said, we defended the dividends and we cut 20% of our CapEx and we have way more to cut if we need to. They never needed to, but they said that. And then they took off. And now people want to buy it for income, fixed income up here. I think they're making a mistake. They're great companies, but up here, it's a matter of timing. What in the world? Chevron especially, this is an all-time high. So there's nothing here it's like a short squeeze in Chevron. I never thought I'd see it. There's nothing here. So the bears are on the run. For Exxon, it's not even close. This is Exxon's chart. This is its all-time highs. They're virtually identical companies. Same with the FXE. FXE is the, nope, not FXE. What am I? XLE? XLE. The XLE is 44% of it is Chevron and Exxon, and then you've got all these other exploration companies in there. So they're not at all-time highs. Chevron is unusually strong. So I would pick on the strongest one. I would sell a call spread in Chevron if it didn't pay dividends, say to May, and sit it out. I think I would win. So I would collect 250, to risk 250, and all I needed for it to stay at these levels. Or not, I don't need it to drop. I just need it not to go much higher than this. So it just doesn't make sense. So the debate is back and forth. And yes, put side, if we break through the levels I just mentioned in the SPX, the put side is tradable down to 3,600, 3,850 to 3,690 is like, I would go long in size, assuming we don't have World War III. And that's my assumption, that I think all the governments are broke fighting COVID. The US spent trillions of dollars fighting COVID. Nobody wants to fight a war. You lost 6 million people. Nobody wants to sacrifice people. Who's going to send their kids to war? And for what cause? So I think they'll work it out. I like the fact that companies are getting involved. So put the pressure on the people, to put the pressure on the leader over there, maybe. And so like Nike, Adidas, I think, Under Armour, I forget, Netflix, Visa, MasterCard, and Amex, even TikTok. That was a surprise. So is China taking sides? That's good. I thought it would take the other side. But if TikTok said they're kind of limiting Russian exposure, so that might be a good news today that nobody talked about. So anyway, yes, on the put side, meaning buy puts at your own risk. Don't short markets actively. Buying puts is a good way of shorting markets, because then you have limited risk. Because the game is almost tied, right? Bulls and bears are going sideways for a few months, and everything is going the way as bears. Everything, every headline is bearish. You have world war, you have a virus, you have a rate hike cycle. You have Fed heads talking like they want to break this economy that they just fixed. I don't get that. They should be in jail for that. And the game is almost tied. So tell yourself this: if there was no headlines in the news and in the world, like if there was no news on any company ever for anybody, would they be buying these P&Ls or selling them? I think they'd be buying them, like Amazon's P&L. Amazon is a good investment right now if it holds the floor. So let's see here, income statement. So if you saw a company doing this, your sales line going from 180, 233, 280, 380, 470, you're not going to say, oh, that's definitely going to go down, I'm going to buy puts. Who would do that? Nobody. But everybody sees the news and everybody's freaking out. Nobody's buying anything. So I do. Here's a little wacky do thing I did. There's a tool out there called Market Structure Edge. It's not an advertisement for it. I don't really use it a lot, but it provides me information I don't have. So part of it provides demand on stocks. So I have this one here. It searches for rising demand in a group of stocks that are liquid and good dollar amount. So rising demand. I usually get between 15 to 20 tickers. 2 weeks ago, before the corrections happened, suddenly that number went to 2. Rising demand, there's no rising demand. Suddenly I was like, wait, did they break it? Did they change the rules on this chart? And I was like, this was 2, this was 0, this was 0. Like, what? Where's the demand? It just completely disappeared. 2-3 days later, the stock market goes down. Okay. So last Monday, it was 2, 1. I don't remember checking Tuesday and Wednesday. Thursday, I checked and it was back to 30. So maybe in a day or two, we will see the demand come back up. Maybe this is a foretelling tool. So I reached out to the people that made the tool, and he said, yeah, maybe you have something there. So I'm tracking it. So that's kind of like a little sprinkle of good hope there. So it went from 2 to 20. Yesterday, Thursday was 32. So this data is from Friday. So as of Friday, it was 26. So tomorrow I'll get the new number and see what that number is. So that's just a I look everywhere. I want clues from everything. And I just got a new tool that tells me a whole bunch of other things that I may be able to get discounts for my people. So it's so convoluted. So it takes a lot of studying. So I used it today. It yielded the results in Roku, the fast results in Roku. So it tracks algo behavior, and it shows you algo behavior versus the actual price. And there was divergence. I was like, on the 1 minute, looks like this guy says there's a rally in Roku coming. Sure enough, boop, it goes up. It gave it up by the end of the day, but that divergence played out. And let me show you the visual of it. This was Roku today. If I go to the 1 minute, this rally, we caught this rally and then again this one. So it was here, and I said, this is the potential path for Roku in the next 20 minutes, 30 minutes. And that is what actually happened. So I drew it ahead of time. I have witnesses. You can see it. 200 people were in the room. They saw it. It came. And I said, it's too close to my target. I would have been out. And if somebody that didn't go out, whoop, they got a chance to get out again. And hopefully they took it. But new tool, used it first time. It worked out. I won't call it a win until I can replicate that. But now Roku is on its heels because they lost a level, and now tomorrow they need to get back above it. Otherwise, they're going to bleed down to 108, 110, 108. Okay.
That's very cool. And just what I want to point out for everyone here is that I threw some links into the chat. Some people were asking about where does Nick trade, or where you can trade with Nick. So with the link that I gave you in the chat, you can trade with Nick as long as he's on there. You're on there, what, 8-9 hours a day, pretty much during the regular trading hours.
I'm on the 45 minutes before the market opens, and I'm usually about an hour late thereafter.
Right. So pretty much all day, if you do day trade, or if you just want to access Nick for some questions, let's say you did some swing trading research and you want to ask him about all those tickers we didn't get to today, even though we gave you guys some great content today for free. But if you want to ask him questions, or if you want to watch his day trading, you can click on that link, join his day trading chat room, and you get almost a daily swing trade pick with video analysis. So every day, even if you work a full-time job, you have access to all of Nick's charts and a live charting strategy session every Sunday morning where he's going over 100 different companies, so that you can even replicate those charts. You can replicate those notes on your own system on Benzinga Pro, and it includes the full Benzinga Pro platform. So you've got the charting, the scanning, the chat room, the news, even though Nick doesn't use news. If you want it, it's there. So you have this whole system. And then Nick is also giving you a daily trade plan with updates on the indices. So pretty much it's the full package there. And today only we'll throw in a free laptop. So
Whoa.
we're doing all of this for about $12.97, less than $1,300 for the year. Free laptop, all of it. Nothing's missing out there. So don't miss out. That's good through midnight tonight. And let me know if you have any questions. I'll throw my contact info in the chat as well. So yeah, that's
this is the Benzinga Pro chat room. In case you guys don't see, first thing in the morning they pop in. Hey, some people have questions overnight. I answer them, and then I come in with my plan. That doesn't look very good. I need to reduce the zoom on it. Hopefully you can see it. So good morning. Here's my plan for today. Last night we minus 1.6%. We're trying to deal with it. Blah blah blah. Don't forget to do the ABCs. A, you out insurance. B, you book profits. C, you close problem trades because there's going to be a pop and what you do with it. Here's the link for the live session. And here are the ETFs levels for the day. And here are the futures levels for the day if you need that. Here's the list of earnings reports for the week if you need that. And then the discussion starts. And then I pop in, somebody's asking me about VLDR. So I answer them about VLDR in details. Airbnb opportunity brewing. I think that somewhere in here lies an entry opportunity with a very tight stop. What did Airbnb do? Actually, Airbnb. Okay, so I think it's still there somewhere in the box, but it triggered the tight stop. So if somebody took it, hopefully they were honest with themselves. Where was I talking? Oh, right there. So, and book profits fast if you get them. And also there was a discrepancy between Thinkorswim and TradingView quotes. That was weird. So this, I said I'm long the SPY. I said I'm long the SXP, which is the S&P. You can do that with the SPY. And then we got a good run. It delivered 25% profits. I said, ta-da, I'm out. Thank you. Somebody may have stayed in, and if they did, they regretted it. And then I described the Roku update, the Roku rally, and a couple of updates on that. So that discussion goes on all day. But what you don't see is the window that I close. Oh, and the video for Snow and the Tesla dip buyers. What you don't see is the chat that goes on all day in the live room. So other than this, you will have access in the morning. You can click on it and you'll be transported to a completely live room where these windows are in front of you. This one, this one, this one, this one, and two more. There we track all the stocks we want for faster opportunities. That doesn't mean you can't be there if you don't trade fast. I don't trade fast. I'm busy doing this. I would mess it up. So we can discuss anything you want live. If you ask me a question about VLDR, which is a stock I didn't know, I don't think I did know, I would answer it here. Somebody asked me in the chat room, VLDR, and she was in here, Irina, I know. And I answered her verbally, and I posted it in there just in case. So you have a trade under fire. Two people did late in the day, almost exactly the same trade. I can't remember the ticker now. Was it AMD? NVIDIA, I think it was. BA. BA. Two people had credit put spreads that had gone that are now under fire. They said, what do you do? And they gave me their details, and I said, in my shoes, I would do this and I would do that. So don't be intimidated by the fact that it's a live room and that you don't trade fast, and you're not obliged to be there all day or any day. You just pop in, ask a question, and leave. You can pop into the chat room in the Benzinga Pro if you prefer that. Pop your question and leave. I wish it was a little more user-friendly to where you can leave me a direct message or something, but so far maybe they're adding it later. But if I don't answer, people usually ask again because they assumed I missed it. Like this one person asked about gold, and I didn't know if they meant gold, the ticker gold, which is Barrick gold, or gold as in like the metal. So I answered as if it was Barrick gold, because they put a dollar sign next to it. So, or maybe they meant something else. Yeah, Barrick gold. So that's what I answered. And whether they saw it right away or not, they popped in, they asked their question, they disappeared because I asked them a question right back and they didn't answer. So I'm assuming they left and came back, got their answer. So I did my homework. I posted the chart. And I said, I would not get long into this, but I would chase it for a trade after the fact. So if they dip, they come back and take it out, I would chase it for a trade that could go to 29 or 30. But buying longs into this is a mistake. A potential mistake. Something I wouldn't do. I would rather miss out.
Awesome. Well, you've been on here for about an hour and a half, Nick. You've given us a lot of your time, and we're grateful for that. I think, I'll throw you this question, and you can decide whether or not to answer it. If you don't want to answer it right now, tell TJ to join your chat room instead. But you might like this, which is why I'm asking it. He says, "Yo, Nick, I sold a 120, 130 April bull put spread today on Airbnb. It hit some technical levels today. What do you think about the trade? The goal is to take profits at 50% max profit." That just sounds like something that you might do. So I don't know. I thought you might
just literally said there's an Airbnb brewing, right? I just literally said that. So can I ask them back? So what did they say the level? What credit put spread was it?
He said 120, 130.
Okay. So usually, first of all, I prefer $5 wide spreads when I'm selling, and I'll tell you why later, but I'm not opposed to the $10, but I prefer $5 wides. So April 120, 130. So that's not my kind of style. So what they're doing is they're basically calling a bottom. I'll tell you why. I'm conservative. When I'm selling something, I want odds in my favor. So when they sell, what they did is they sold this one, credit put spread. I'm not saying they're wrong. I said not my style. So they said this. So they collected $4. So let me answer it in a very stupid way. Have you ever met an easy 70% yield trade? a trade that delivers 70%. Have you ever met an easy trade that delivers 70%? Because that's the statistic on that one. They're collecting almost half the bounty. So when you're collecting half the bounty, you have half the odds. There's no advantage to you or the buyer of that put spread. You're at the mercy of the price. So it's like buying shares. I prefer to do it, risk more money, lower, where I have an advantage. So down here, my theoretical odds, that's my risk. My theoretical odds is 85%. I'm the seller. I chose my odds. The guy that bought this from me bought a losing lottery ticket, hopefully. This one up here, the one you makes you more money, risks less money, but you have no advantage. The buyer of that has as much odds of winning as you do, basically. So I prefer to risk more, lower with higher odds, than risk less up here with almost no advantage. So me, the low risk taker, I want odds in my favor. This would be my better one. In fact, it would be this. Because this, if I don't get out and price is near here towards the end of the expiration, this one can't help. It's way too far. So I might as well sell the put naked and not give back that $1.40. So anyway, I love sharing this. Thank you for sharing your trade. It's not easy to put your book out there. It's not a wrong trade. It's just not my style. I would modify it a little bit to where I would make it in my favor. Mind you, this is still, what did I say, $5 wide? This is still super attractive theoreticals. So I have an 18% yield on my risk with about an 85% chance odds and no earnings report. Well, that's important. Why? The reaction to the earnings report is a complete coin flip. I don't know what they're going to do. They're crazy. They bought up the Robinhood report, which was garbage, and they loved it. And then they threw down a company that doubled in size. What? No. So you don't know what they're going to do. So thanks for sharing.
Yeah, thank you, TJ, for the good question there. And so, Nick, feel free to stick around if you want to. What I was about to do is I was going to basically just walk them through where to find everything in the chat room. It looks like we already had a few people join here. But I'll just show them where to find your chat room, where to find your picks, all that good stuff.
So I would love you if you can do that. I do have to go do a write-up. So, but before I go, I want to tell you that if you join, first of all, consider it a classroom for a year for peanuts. Really, if you approach it from that, if you're coming in, where's the trade alert? Where's the trade alert? I almost don't want you here because I want people that want to learn how to do things forever. I swear to God, you're going to see some pretty aha moments in there that were aha moments for me. And they're simple and they're repetitive. And I have people that have been in there for years. And that's testament that you don't outgrow it. We're trading together. I have people in there that are stronger than me technically. They know harmonics better than me. They know the Fibonacci better than me, but they stick around because when we're collectively trading, we make fewer mistakes. We have bigger watch lists. 100 people looking around for things. We're going to find, like somebody came to me with a stock that's up 800% today. I can't remember the ticker. It's like $18 million stock. Like I can't do anything with it, but hey, they brought it to the table, Vusu or something like that. Anyway, whatever it was. So join and Benzinga will give you your money back. So what do you got to lose? Nothing. You put the money up front. That's fine because I want you engaged. If I take a free trial, maybe I join, maybe I don't. Maybe I participate, maybe I don't. But if I pay for it, I'll be milking the hell out of it. I want to test it inside and out before the thing runs out. And you get your money back. And I've been working with Benzinga since 2011, I believe. And I don't work for them, but I work with them, and it's by choice. So I love the way they do business, and I love their stand-up people. And they're super busy, but they still have the personal. Like you probably have somebody's phone number to call today in case you need help. And Jonathan is here to walk you through everything. So join. And what you do is tomorrow is you check into the chat room before the market opens. You'll have the plan for the day and the link for the day, and then we'll go from there.
Awesome. Sounds like a plan. I'll see you tomorrow morning, Nick.
Okay. I'm going to hang up if I can find the hang up. Where is it? Don't mind me. I'll find myself.
All right. So I'm just going to go ahead and share my screen here.
Yeah.
I'm just going over to Benzinga Pro. Let's see here. And so, we have covered so much good stuff today, and you can find all of this pretty much every day inside of Nick's live trading room. He showed you some of those charts that he was using earlier. And the place where you're going to find that is within Benzinga Pro. Once you click on that link and subscribe, you'll have access to this full platform on here. And then you can scroll down. First of all, you'll see that on Sundays, this is what it looks like to access the spreadsheet with all of those different tickers listed, all of Nick's different charts, and then the video where he goes over all of those charts. So if I click on this link, then that's going to open up my spreadsheet. And if I want to know about any one of these companies, let's say I want to check out Google, I just click on Nick's link there and see all of his notes. And then on the video, he just goes through and covers verbally while you're looking at his screen, every single one of those companies. So that is an amazing educational tool. No matter how much experience you have, you can immediately just start to absorb, okay, after you go through about 100 charts, you start to understand, oh, that's why this was support or resistance. That's why Nick would stay away from it at this level, but then be more excited at this other level. So that's probably your number one educational tool if you're starting out, or if you're swing trading. Maybe you work a full-time job during the week. You can only day trade 1 or 2 days a week. You can do your homework on the weekends and be good to go. Then he also emails out a link on Saturday nights where you can give him tickers that you want him to review live on the Sunday sessions. Next up are the daily swing trade alerts. You can see here that he did separate videos for Restoration Hardware, Funko, and Marvel here. Marvel was more of the complete trade setup and everything. And so you would just click on that to go to the YouTube link with the full write-up on that stock. Lastly, you're going to go to each morning, you're going to go to the daily trade plan. So if I scroll up here, this is from this morning, and he's giving you an update on the indices. And right here, it says live session, along with his charts and updates on the ETFs for the indices and the futures. If you click on live session, this is where you're going to day trade with Nick. Someone says they can't see my screen. Thank you for whoever said that. Huh, David, you're a lifesaver, man. I was just talking to myself over here. Sorry about that, everyone. So I guess I'll just go in reverse order now. Basically, I'm going to live here inside of Benzinga Pro on the chat. And then I can, every morning, he says, good morning. He updates you on the indices. He's giving you some reminders on the ABCs of high volatility trading. And then you have that link right here to that live session where you can click in there and you can see his charts. You can hear Nick's voice as he's trading or calling out trades. And there's a live chat in there with everyone who's day trading with Nick. So that's all inside of this Benzinga Options Inner Circle chat room or channel. And that's different from all of the other channels that are available on the Essential plan. It's just this Benzinga Options Inner Circle plan with Nick Chahine. So just moving in reverse order here, since you couldn't see my screen a minute ago, that's where you would make your home base every trading day. And then as far as starting your week, if I just scroll up here to Sunday, we can see that on Sunday, that's where he posts the video. This is the recording if you didn't attend the live session. So you click on that video to watch all of the charts that he covers on YouTube. It's a private link, or you could click on this link here to access the spreadsheet with all of the different tickers, the charts, as well as his notes on all of those companies. So let me know if you have questions on that. But it's pretty straightforward. You have access to the live trading. You have access to the research on the weekends with all the charts, all the notes. And then the last thing that I didn't show you on the screen was the daily swing trade alert. So if I scroll down here, you can see his alert on Snowflake. Again, this is pretty much what it looks like. And you just click on that and it'll go through the entire trade setup or potential trade setup for Snow. And it's all available right here within Benzinga Pro. Derek is asking, do you get access to all the pro trades when you sign up, or is it restricted to Nick? Access to Matt Maley is another separate service. Yeah, great question, Derek. So we do work with some other analysts. Those other analysts, Inner Circle chat rooms are not on Benzinga Pro. There's actually a separate platform that those are on. So that's not all included. Those other analysts are not all included with Benzinga, with the mentorship plan on Benzinga Pro. If you have any questions about any of Benzinga services or what's best for you, whether it's Nick or let's say Matt Maley or anyone else, just shoot me an email. I'm throwing my email into the Zoom chat here. It's jonathan@benzinga.com. So yeah, just shoot me an email, Derek, if you have any questions, and I can clarify that for you. And then I'm just double checking the YouTube chat here as well. It looks like, yeah, Nick definitely does trade the indices. It's a core component of what he does. And then let's see, signed up for Nick. Awesome, El. Fantastic. You're all signed up. You're good to go with your free laptop. That will be shipped to you as soon as that 7-day money back guarantee period is over. So just so everybody knows, you have 7 days where you can test it out fully. For whatever reason, if you change your mind, we'll give you a full refund. As soon as that 7-day period is over, then we'll email you a form to fill out your shipping address within the United States and ship that directly to you. So awesome. Thank you. Dan, is there an account size to join the chat room with Nick? That's a great question, Dan. Very common question. What we saw today is that even if you had under $2,000 to work with, what Nick said about one of those spreads was that you only needed $500 in your account to do the spread, or $300 in your account to do the spread. Now, of course, the more you have in your account, the better. But what it's saying is you don't have to have thousands and thousands of dollars. You don't even have to be over the PDT rule to do a lot of this stuff. As long as you're using some of these more conservative strategies with the spreads, you can do this with a small account, and then also learn the skills day in and day out of how to identify the right opportunities so that you don't lose all that money that you've worked hard to save up. And then, you can just consistently, with those 85% chances of winning, hopefully build up your account over time. All right, so NL, once you're in the site, you're on Benzinga Pro. Once you purchase, the place where you're going to go to access SNCC is over here on the left-hand navigation bar, where you have all these different tools, and you want the chat tool. Normally it's open by default, but it looks a little skinnier like this. And you might have to scroll down here to go, like you can choose these different chat rooms. You might have to scroll down to access the Benzinga options inner circle and then click on that. And notice how when I click on these different channels, it changes the content up here at the top. So click on options inner circle, and then you can see that's where you'll find Nick Chahine and all of his posts right there. Chris, unfortunately, we don't ship the laptops to Canada. We would love to. We love our Canadian friends, but we won't be able to ship outside of the United States for the free laptops. It's still a crazy deal, though. You still save over $2,000 off of the list price. So just let me know if you have more questions about that. And I'm just reposting here within the YouTube chat so everybody has the link. All right. You're welcome, Dan. Thanks for being here. All right, let's check out, let's see, one of these trades from earlier today. I think what I'll do is, I'm not really supposed to do this, but just for sticking around, I'm going to open this up here for the snow trade setup, just to give you guys more of a full idea of what it's like when you're a part of this program. So I'm going to click on this YouTube, and I'm pausing that really quick. And then I have to make sure that I'm sharing. I might have to reshare here. I'll stop. And then I'm going to reshare so that you all can see that. I'm going to share the sound. Let's see here. And so let me know if you have more questions here. I'm just going to be quiet for a second. I might pop in, but in the meantime, I'm going to let you guys see what his trade setup was like for Snowflake. Let's do it.
Doing homework live in the live streaming room and chat room. So somebody asked me about snow. They had played it from 2:30. Anyway, they played it higher and they made money with it and they want to re-engage. So I said, okay, the price action, I pulled up snow. I know it's busy. Trust me, I'll walk you through it. So I pulled up technically. So the fundamentals are questionable because it's still a new company trying to prove itself. People who know about the industry and what it does believe in it. So you can do your own due diligence or leverage somebody else's. And there's plenty of research out there. Look into it. To me, it's very easy. The P&L looks like it's getting better. It just needs time to prove itself. So for example, it's showing me revenues that are growing pretty freaking fast. Maybe they're slowing down of late. I'm not sure. The gross margin's okay. They still lose money. It's not cheap, I can't imagine. Price to sales is 50. So clearly a pretty expensive stock, but we're not looking for cheap, we're looking for growth, and this one should have it. Now it moves fast. This is a daily chart. So it opened up here, it rallied to here, it collapsed to here, rallied to here, it collapsed to here. So they're saying, can I re-engage? So the easy answer is you can, because it's falling into a bottom. It is a risky stock. So if I needed a speculative bet on snow, I'm confident I can make one here with a tight stop. What does that mean? If I risk $1,000, I say to myself, if I lose 300, I'm out. That's just one simple way of doing it. Or if it loses the low of whenever that was, May of last year, then I'm out. So below 185, I'm out because I literally don't know where the bottom is. There's nothing below here. So two ways to stop out. Risk X, know it's risky in a risky market. Therefore, this is a speculative bet trade / it's not a full-blown investment. Stop out at X% loss. 30% sounds good for me. Other people are different. Or if it loses the line here, 185, I'm out, because literally there's nothing below it. So that's one way to deal with that. Now, this blue line and this green line, this green line played out. This blue line is saying there's something positive brewing, but it doesn't say when, and I'm looking for corroborating evidence, and I don't see it yet. The relative strength index is not showing. It is showing a slightly lower low. This one isn't, but this one is, so maybe no. I looked into other tools that I have. They may be saying also maybe on a certain time frame, but nothing favorable, nothing 100%. So this is a call where you go, okay, I have a stock that's pretty violent. I've done well before. I think I want to take some risk on it. How do I take the risk? I can buy shares. Depends on, I think that person bought shares. And then stop out at X% lost. If I'm buying calls, they're probably expensive and they're probably very violent. So I better have a pretty strong stomach for it. The alternative is to buy a debit call spread. And a debit call spread can be a good way of capturing upside without putting a lot on the line. The cost can be about $3 on a $10 white spread. For example, if I buy the $215 call and sell the $225 call, say for April, I haven't checked, I'm just speaking, it should cost about $3 or so. Then that's the maximum out-of-pocket expense. That's easy. If I wanted to buy shares, I can sell puts instead. The VIX is 34, for crying out loud, 35. So the premiums are hot. Or I can sell a put spread. And if I can also do both, sell a put spread and buy a call spread. Okay, so I brought a picture to show you an example. This is not a trade recommendation. It's an example of things I can do. So this is April, 38 days on the clock. I can buy a call spread. If I buy a call, it's $1,400 for one call right there. I don't know if you can see it. Hopefully, I'll expand it. I'll keep blowing it up. Okay, so the one call for the $210 is currently here. $1,400. That's a lot of money. I can buy a call spread. This is 3.4. So $340. The maximum I can turn it into is $1,000. That's not too shabby. Doubling my money and then some, that's pretty cool. I need a rally for that to win. I can lower it to here or here, and it'll be the cost about $4 or $4.50. So a chance to double my money with a better delta. But you know, if it's going to rally, this is going to happen. The alternative would be to sell risk. If I sell a put spread, I'd collect about 80 cents down here, air math. So as long as Snowflake stays above 155, this one wins. So if I do both, this is a credit of 80 cents. This is a debit of $3.40. So the net out-of-pocket expense is the difference between the two. So I'm spending a lot less and I'm pretty long. But if it falls, then I'm losing on both ends. So usually people choose this or that. I prefer these because I don't need a rally. If somebody wants to own shares now, why not collect $500 to promise to own them here? What? Yes. If I sell this put, I'll collect $500. All I have to do is buy shares at 155. And I can't back out of it. The only way to back out of it is to book a lot of losses. Why? If the stock price starts falling, this 500 will turn into 2,000. And if I want to back out of it, I have to pay 2,000 to get out of it. It may be more than 2,000, maybe less, but it'll be more than 500. Not a good idea. So panicking when I sell a put is like the worst thing I can do. So don't sell a put that you can't honor. I never sell a put of a stock I don't want to own. Period. End of story. No exceptions. Okay, so technically it is in bad shape, but technically it promises better things, especially if markets hold up. So you got pretty weird markets, pretty weird stocks, both really speculative. Therefore, taking a full-size position is nuts. Taking a half position, good. Tight stop, excellent. I gave you dollar amount. I gave you level amount. I gave you target areas, but there's no, like, if I don't not get out of a stock trade, like if I said, okay, it can go to 300 and you set in your mind that 300 is the target and you stay long until we get 300, that is not how I trade. If I get 20, 30%, I'm out. Thank you. Move on to the next trade. But Nick, you left 80% more. So what? I got 30%. No thanks. I'm good. Later. So depends on the personality. If you're the person that wants to milk every penny out of every trade and you're okay missing out, I mean losing, fine. I prefer missing out than losing. Okay, so this is how I would deal with snow right now. Somebody asked me, so I'm making a full trade setup out of it. Knowing the caveats. A, market's super speculative. B, this stock is super speculative. And C, therefore, you need to actually be very disciplined trading it.
All right, everybody. That was just a real quick example. MG, I'm here. I'm here. So if you have questions, go ahead, throw that into the chat. It looks like we have 9 laptops left. This is good through midnight tonight for less than 1,300 bucks, guys and gals. So normally we sell Benzinga Pro for around 1,400 for the year. So you're literally getting the mentorship, everything that Nick has for less than the cost of just Benzinga Pro. MD, I see you in the chat. Dan, I will give you a call. Thank you, L, for your email. I'll be sure to cover that right after this. So just going back over to Benzinga Pro, before I wrap it up for this afternoon, I just wanted to give you a quick idea of some of the other tools that are available on here, along with the mentorship program. So Benzinga Pro started, believe it or not, as a stock news resource. So even though Nick does not really trade off of the news, a lot of people do. And a lot of other people do, scalp off of headlines. Even if you're just keeping up to date about why stocks are moving, it's a great resource with a ton of filters. And you could always find your press releases or SEC filings here, along with the other headlines on Benzinga Pro. You can filter it by a screener, a watch list, certain types of news like mergers and acquisitions or FDA approvals. That's all available right here on the platform. Then we actually have 3 different types of scanners. So if you're just looking for stocks that are gapping in the morning or stocks that are taking off during the day, we have the scanner tool, which is probably our most advanced scanner, where you could scan for stocks, moving in the past 60 seconds with a high relative volume. I might just set it up really quick like this. I would say change percent, custom, it's moving at least 0.5% in the past 60 seconds. And then I could go up to relative volume for RVol, and I could say it's at least 1.25. So it's at a 25% higher volume than what the average is in the past 5 minutes, and it's spiking in the past 60 seconds. Then I could add both of these to my table and sort by the percent change in the past minute. So really quick and simple to cycle through some of those big movers or fast moving stocks from our scanner. And then you can also use the movers tool. If you just want to simplify it a little bit more, maybe you don't need all these bells and whistles. The movers tool was our original scanner, and it's a great way just to find those stocks that are gapping in the pre-market as early as 4 a.m. So I can just go up here, choose gainers, pre-market for the entire session, and immediately see which companies were gapping this morning. And I can switch this over to the chart tab on a 5-minute chart and map all of this out in the pre-market. You can see it gapped and crapped here. We were talking about BBBY earlier, I believe. But it's very simple to find some stocks that might be primed to break out. This is actually a great example here. Houston American Energy. Let's see here. So if I mean, you can tell that this was moving like crazy here, but you can do all these drawings that we were doing earlier on Benzinga Pro. So if I'm just mapping out these pre-market highs and lows and consolidation areas, it just makes it really nice. I mean, I'm sure many of you use your brokerages or other tools, but you don't even have to. You can have all of this right here inside of Benzinga Pro. map out those key price levels, and then you can see how those price levels really matter when it comes to the open and then later on in the trading day. So when it broke through some of those levels, traded up, tested 562, came back down, and then when it broke through 562 and $6 later on in the day, it was really off to the races. So yeah, love the movers tool, love the scanner tool. And then we also have the calendar. So if you want to just do some research on earnings, analyst ratings, unusual options, this is a historical research calendar where you can filter by any of these columns. For example, I love looking up analyst ratings, and I could just tell the system, you know what, I just want to see all of the initiations for today with a price target of less than $50. So initiates coverage on, and then go down to price target and say less than 50. That way I know they're smaller price per share stocks. And many times, if it's a green day in the markets, you'll get some movers here, on those positive initiations. So, and then you can also change the date range here as well on the calendar tool. So there's a lot more on here. Oh, last thing about the other tools before we switch back to the options mentorship is the audio squawk. If you do want to know what's going on in the market with the news, maybe if you're like Nick completely, you just want to shut it out and ignore it. But a lot of people do swear by the audio squawk done by Benzinga Charlie. And from about 6 a.m. to 6 p.m., you can hear the most important news items through your computer speakers. You just click on that blue play button, and then it'll say connected, waiting for audio until he broadcasts, and then you'll hear him come right through your computer speakers. David, I see your question here. Any way to see multiple analyst price changes? For instance, there have been 7 analyst price increases on Beyond in the last 7 days, or in the last 10 days. What I would do, yes, David. So you would filter by time frame. So let me go back here to the filters, throw in those other analyst ratings, and then get rid of this other price target requirement. And so really, all that I have to do is change the date range. So I would go back to what? It would be February. If today's the 7th, I could go back to the 23rd, let's say. It's the 23rd, and then go up to the 7th. For some reason, there we go, the 7th. And so now I have all of the analyst ratings from the past 10 days or so. Now I can sort this table by symbol instead of the date and time. And this is just kind of eyeballing it. It's not a true filter in terms of only show me stocks that have 7 or more price increases. But that's just going to give you all of the ratings, and then you could filter it down more by, you could go to like action price target, and now I could say only show me where they raised the price target. So now I'm seeing all of the price target raises within the past 10 days. And so if I go to like Broadcom here, we can see those 4 price target increases. What was the one you mentioned? Beyond. Let's see if Beyond shows up here. So I'm not seeing Beyond. I'd have to take a closer look. I did this pretty quick here. But let me know if that's what you were looking for there. This is all on the analyst ratings calendar. So just to reiterate, you would need to open up the calendar tool and then click on this drop-down menu and select analyst ratings instead of earnings, which is the default. Then I changed the date range to February 23rd through March 7th. I sorted by symbol and I filtered by, I think it was action price target. That's what it was. Action price target is what I used. So a lot of flexibility here on the calendar tool. It's really quite powerful. Let's see here. All right, people talking about oil on the YouTube chat, which obviously is very important right now. Okay, so just to recap, I hope you all appreciated what Nick gave us today. If you're watching on YouTube, please give us a like and subscribe. There's a lot of other stuff on our channel too. So for those of you who are in Zoom, definitely check out our YouTube channel, Pre-Market Prep, Money Mitch Trading. There's so many great trading ideas. And then don't miss out on this opportunity to get a full year of access to Nick's trading room inside of Benzinga Pro and all of these other tools. I'm just going to throw this link here one more time into the chat rooms. This is good through midnight tonight. And then I'm going to post a little slide onto the screen just while people continue to watch through the YouTube. So let's see here, throwing this link again onto Zoom. And then again, you can reach me at jonathan@benzinga.com or 313-221-9214. Throwing that onto YouTube as well. And I'll just switch over to the one that I'm sharing. So I hope you all had a great time with us today. I know this is always one of the highlights of my day. I hope you have a great afternoon and we'll be in touch soon. Until next time, happy trading.